Good Thursday morning, Market Chameleons. Everyone joining us for the first time. Thanks for coming to the Market Chameleon pre-market show. How are you doing, Dima?
Good morning, Will. How are you?
Great. You want to start with the disclaimer? It's up there for everyone to see.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your broker, call your registered investment advisor. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And with that, I guess I'll share my screen. And what we'll do today, open up for questions. Hold on, there's something going on here. Do you have to let go of your screen?
Yep, I stopped the share. Does it work now?
Yep. What we'll do is open up for questions today. If you guys have any questions, put them in the live chat. We're going to monitor them, read them back to me. If you want to come and ask your question directly, we put out a Zoom link there. Click on the Zoom link. When you come over, click on raise your hand. You don't have to turn on your video camera, but we'll let you in and you could ask your question directly. It could be anything, Market Chameleon tools, strategies, analytics, data. You want to come on and come over and ask that question, that would be great. You want to share, if you have strategies that are working for you and you'd like to share those, you're welcome to come on board and share those strategies and walk us through it. If you did things that did not work out and maybe you were expecting something different or you'd like to discuss it, you're welcome to come on board, come on the show and discuss that as well, because in either way, it benefits the entire community because it's about education, learning from experiences, and making improvements and adjustments as we go along. So while we're waiting for that, if there for any questions to queue up, there are no questions, what I'll do is start just going over some of the stuff that's going on in the pre-market hours. We'll take a look at other tools and analytics on the website. If we got any questions that come through, then we'll focus on them. Sound good, Will?
Perfect.
All right. So right now I have the pre-market report up, and these are a list of stocks that are trading in the pre-market hours. We have the most active stocks. We have a list of the biggest percentage gainers and a list of the biggest percentage decliners. I'm going to come down here and I see that 68 stocks right now made our percentage gainers list, 174 on a percentage decliners list. So from that perspective right now, we look like we're setting up for more bearish bias at the open. And I think that this probably flipped after we got some news today. I think that there was supposedly some news coming out on inflation. Is that correct, Will?
Yeah, the CPI came out today.
Right. And I guess after that came out, it looks like the market reversed and is dropping now.
I guess you have to go back to 82 to have a CPI number like this as high.
1982? That's how far back? What was like 7.5%?
7.2 something, I think.
Right.
So yeah, right around 7.5%.
7.5%. And we still see oil. Where the oil prices now, like $90, above 90, heading to 100.
I don't know. It cost me almost $80 to fill up my truck every time I go.
Yeah. And that's like a tax that impacts everybody, right? It's and not only if you're filling up your gas tank, but that's also an input price to, any transportation, producing goods and services. So it's a pretty heavy tax on the world. But let's take a look at, let's narrow down this list and see maybe what's going on in the S&P 500 stocks first. So I'm going to use the filters up here. And let's take a look at this filter in ETF. I'm going to drop this down and we're going to filter it by SPY ETF. And what this will do is filter the list below by holdings in the SPY ETF or S&P 500 ETF, right? So let's do that, SPY. And I see here 10 made our percentage gainers list, 27 on the decliners list, and similar situation there, more stocks down than up, right? So bearish bias at the open, even in the S&P. Couple things here I see on the percentage gainers list. Disney, KLNMU, Twitter, and they're coming out with earnings. So we got Disney came out with earnings, I believe. I'm hovering over last night. So they're reacting. So those are most likely reacting to earnings events. And that's up 6.6%. So let's take a look at Disney a little bit closer, see if we get any more insights on Disney. By clicking on Disney, I get this report below. Okay. And this allows us to analyze Disney's price action, historically, how it moved, opening gaps up, down, and so forth, and what tended to happen to the stock after the fact. So here we see Disney, we're closed 147.23. It was up 3.3% yesterday. Right now in the pre-market, we're at 156.53, up 6.3% in pre-market hours. I'm going to come down here. This is kind of what the pre-market chart looked like, and looks like with the rest of the market, it was up here a little bit higher earlier in the morning. News comes out, and the market in general sells off, and it looks like that it took a little bit of a hit here too. This is the VWAP table, so you could see minute by minute how the stock has been trading in a pre-market. So you could see the number of trades in each minute, the total volume for that minute, the VWAP price. So that's the volume weighted average price, and the change from 1 minute to the next. You also get the high and low price for that minute, and then at the ending market bid and offer. Okay, so you could kind of go in there at that table. This table is sortable as well. And here's the news over here. Since they reported earnings, let's take a look at historically how Disney did around earnings. How did it tend to react towards earnings? And I have these tabs here. So I could look up its gap up history, gap down history, or earnings. And that's the one we kind of want to focus on, because we know that it did report earnings yesterday after the market closed. It's reacting to that. And let's compare today's reaction to what it tended to do historically. So I'm selecting earnings stock patterns here. I'm going to come down here, and we have a table here, and it's divided into kind of three sections. One is how did the stock behave leading up to the earnings event? So starting out 2 weeks ahead of time, we capture leading up to the event 2 weeks, 1 week, 3 day, 2 day, 1 day. And here are the dates of the earnings historically. And this is how it tended to perform. Then we have the day of earnings, right? And that's kind of right after reported, reports earnings after the market closed. Maybe it reports before the market opens. And then once there's a release, the stock starts to react to the new news, right? So people have a chance to look at the new financials, listen to the company's conference calls, read the company notes, management notes, and then they start they take that into account, put that into their models, and they're repricing the stock. And then, so the stock will move. And this is a capture of the last 12 historical moves. So we're kind of right here, right now at the opening gap, right? We're trying to figure out, well, where's this stock going to open. What is the gap move? Right now it's trading in the pre-market hours, up 6.6%. So historically, this is what it tended to do on an opening gap. 73% of the time, it opened higher, 27% lower. So it tended to, initially react positively to the news for an average gain of 0.6%. The magnitude of the move, up or down, right, is 3.3%. So to get the magnitude of the move, what we do is we convert all these to positive numbers, because what we're looking at the volatility, right? Convert them to the positive numbers, getting the absolute average, 3.3%, with a high move of 6.6%, which was this one, November 10th. That was the high, the biggest magnitude of the move. So right now we're like right there at the high end, right? And I think it was even higher than this earlier. I think I saw it as high as, I don't know, 9%, 10%, something like that. And we could see up here from the chart, right? From the chart above, it was up here. Now it's getting pulled down with the rest of the market. So this is the historical gap moves. What happened or tended to happen after the open. So it could open up, it could open down. And what if we use that as our new reference point? From the opening price, it has a full day of trading, right? And that full day of trading, you're going to have a drift, right? You're going to have a drift from the open. It could move up and down, and that opening price will reflect that initial reaction, but then you have other things kicking in during the day, because then you have, your VWAPs kicking in, your institutions that can't, participants who can't trade even in the pre-market, and they won't do it right at the open. All those algorithms start kicking in, people are readjusting their positions, whatever they had ahead of time. So then we have a reaction throughout the day, right? So what tends to happen after the open? And here we measure it a couple ways. First, we want to see the magnitude of the move, the range from the open, up or down, right? So from the open to the high of the day, the average move was 1.3%. From the open to the low of the day, the average move was 2.6%, which here historically has shown me that it tended to be more volatile towards the downside than the upside. Okay, so those moves towards the downside were more extreme than the move to the upside by almost 2 to 1, right? Twice this. So 2.6% versus 1.3% to the upside. And what did it tend to do by the end of the day? Where did it close? You got a whole full days of trading going on there. Everybody's putting in, their orders. People are moving their inventory around. So what happens by the end of the day? This is what tended to happen. More often than not, 82% of the time, it drifted lower from that opening price, right? So we're talking about from the opening price, drifted lower 82% of the time for an average loss of 1%. So this is historical return distributions in Disney after reporting earnings. Okay, that's what we're looking at here. We could come down here, also take a look at the average magnitude of the move intraday. So it's about 1.6% with a high move of 3.5%. All right, so after the opening, how volatile could it be? That's over here. And what is the max high move? Best move up, worst move down, 2.7%, 3.5%, average loss of 1.1%. So that's in Disney. Here we see coming out the next day, what tends to happen. And it's kind of like a mixed bag, 50-50, a little bit more often than not, it goes up. On average, it looks like it tends to gain coming out of earnings, right? So So people have more time to kind of then think, adjust their models, and it looks like, it tends to gain, but it's kind of a mixed bag, the amount of times it goes, frequency of times going up versus down. So that's really quickly insights into Disney after reporting earnings. All right, so we're still in that pre-market, in that pre-market right now. Let's take a look at what's another one that just for Twitter.
So Twitter would be a good one to look at.
So let's look at Twitter. And stop me if you have questions, but if not, I'll just kind of continue. But here's Twitter. Looks like they were up 5.1% yesterday, closed at 37.83. Right now we're 38.02, so up 0.5% in the pre-market hours. Here's what the chart kind of looks like in the pre-market. So you could see here, probably right here, it reported earnings around 7 o'clock. That's where the volume started coming in. That's kind of the news cycle. And it looks to me like it was a little moving up and down. Right now it's trending lower, and I think that's just getting pulled down with the rest of the market. And here again, this is the VWAP table below. If you wanted to click on the news here, you could click on those headlines. Since we know it reported earnings, right? We have that. When did it report? This morning, right before the market opened. So let's take a look at those earnings stock patterns. And here we go. And here right now we're over here thinking about day of earnings. They reported. What did it tend to do in the morning? What did it tend to do the rest of the day? So here we go. Opening gap. Right. This is where we're thinking, where is it going to open right now? It's up 0.5% in a pre-market. Historically, it looks like 55% of the time it was up, 45% down, mixed bag there. On average, it was down 1.8%. So to me, it looks like when it was up, the up moves were not as violent as the down moves, right? That's what this is saying, that even though it's about, we've been up more often than down, but the down moves were much more violent, right? Because that's why we're getting this 1.8%. The average magnitude of the move up or down, 8.7%. So if we converted all these to positive moves, 8.7% up or down. So here we're a little bit more muted. And we could see the high move, 18%, low move so far, 1.7%. So there's that 18%. And the best move to the upside, 10.6%. The worst move to the downside, down 18% at that opening, okay, at the opening price. So that's how it tended to do at the open. What about after the open, right? So gaps, opens either up or down. How did the stock trade throughout the day? How were the distribution of returns throughout the day? How did they look to the upside? How did they look to the downside? How did the returns look drifting from the open to the close? So let's take a look first from the open to the high. So this is to the upside. From the opening to the high of the day, it looks like the average move was 4.7%. So 4.7% to the upside. What about to the downside? From the open to the low of the day, on average, it was 2.9%. So here we're seeing, I think, the opposite of Disney, right? Disney was the other way. The downside move was 2 times as big on average than the upside. Here we're seeing the upside, the move to the upside tended to be more violent than the move to the downside intraday. Okay, so that's using the last 12 earnings. By the end of the day, what did it tend to do? So from the opening price to the end of the day, well, kind of mixed bag too, 45% of the time higher, 55% lower, an average eked out a 0.1% gain. So even though more often than not it did trend lower, the up moves, as we could see, tended to be a little bit more higher than the down moves. Intraday volatility, the average move from open to close, up or down 3.8%, with the high move intraday 7.7% on April 23rd. Okay. That's the intraday. And here it looks to me like following the next day, so we had a full days of trading after earnings. The next day it tended to be weaker. Just next 2 days actually tended to be weaker. Looks like maybe a lot of people tended just to take positions off maybe, but it did look historically, 91% of the time, the next day was down. 82% of the time, for 2 day return, it was down. So on average, 1.9% for 1 day, 1.8% 2 days. So if you don't have any questions, Will, everybody's good.
We did have one question. It was kind of off topic if you want to answer it. It was from Attila, who's on the Zoom.
Okay.
He was asking about ETFs. I was hoping he would come on maybe live to dig deeper into it, but he asked, actually said he had no mic. He asked, hi, Dimitri. He's asking about ETFs. Are equally weighted ETFs real investment vehicles or more of a statistical interest? He's asking what your experience is with like IWM or SPY.
I'm not sure what he means by that question, if they're real investment vehicles or it's just a different way of weighting the investment, right? So like a cap weighted is saying that you're more invested in a higher cap stock than you are in a lower cap stock, right? So but an equal weight is just saying that you could have a high cap stock like Apple, right? Let's say you have a stock like Apple and Twitter, right? So Twitter, the market cap is what is Twitter's market cap? Let's take a look. So Twitter's market cap is 30 billion, right? So $30 billion market cap, and Apple is like, what is it, like 3 trillion now or something like that? So in a cap weighted, you would be much more heavily invested in Apple than you would be in Twitter because it's a much bigger company. Equal weight is just, you're saying it doesn't matter, Apple and Twitter, you're risking the same, right? $500 in each, but that's it's just a different methodology. But maybe I don't understand the question, because it sounded like you said, are they real investment vehicles? It's just a different weighting scheme.
Well, certainly they're real investment vehicles because you can actually go to the exchange and purchase them and put them, but they do have, risk as well. It's
just a different weighting.
You're actually not buying the baskets of the stocks, right? That's one of the risks. It's you're relying on a third party to make sure that they hold the stocks, right?
Yeah, and that they're doing it in a different weighting scheme. So, like for example, like SPY, we'll take a look at SPY. Here's SPY, and here's the holdings, right? So Apple, right, $2.9 trillion. These are SPY holdings, and SPY is a cap weighted. So you can see Apple has more weighting than the lower cap stocks. It's just, and why do you do that? Is that you're trying to reflect, like, if you have a basket of stocks and Apple in that basket is responsible for most of the earnings, right? That's what you're doing. Because what is an ETF is trying to, it's almost like it's creating a diversified company for you, right? So instead of you doing it, it creates a diversified company. And really what you own is like this big, I think, conglomerate of stocks, right? And overall, if their earnings go up, then it should do well. If the earnings go down, but if Apple is responsible for most of the earnings in this ETF, let me see if I even have that. I think I might even have that, but that's why you're weighting more on Apple than maybe something like, let's take a look at the lower, than some of these, because these are lower cap stocks. They're not as big, and they probably just don't have, as much earnings contribution to the overall group. So that's why they're waiting. That's why the cap weight. Let me see. Right. And that could change. I mean, I think that this could change. They could change. I think daily or whatever. I forget how they balance it out, but there are daily. You could get daily holdings on these things, and these weightings are changed, but they're cap weighted methodology. Equal weight will say, well, I'm going to own, an equal amount in each stock, I guess in notional terms, right? So it's like, what if I just invested $1,000 in each stock? So it doesn't matter, right? So a smaller stock would have as much weighting as a higher market cap stock.
Well, that's super helpful, D. We did have an interesting comment. I think it was from Alex. He's like, "Is this when you were going through the previous piece of the Chameleon?" He was asking. It seems for him it's a new feature, but it's been there for a while, right? The information you showed earlier. It's just amazing how rich the Chameleon is with features that different people use different things, and it's always great to explore another piece, and that's why we do this show every day. And it was a great job, D. Thanks so much, buddy.
Right. Well, thanks everyone for joining. Thank you for the questions. Stay safe out there, everyone. Hope you guys have a great trading day, and we hope to see